morning. I've spent many years inside the matrix of the stock market, respecting how the players who spend millions daily get in and out of trades. I know how they work because I'm the one who designed their trading systems to outsmart even the most savvy fund managers. My content will be designed to help you become a better version of yourselves as traders and long-term investors. Some of you ask daily, why did my last perfect trade hit the stop loss and then immediately moved away without you rising to the price that you originally were targeting? Because you were the exit liquidity. You bought the RSI or the MACD fake breakout right into an institutional ceiling. You played their game by their rules. You see, you all say they are stop loss hunting. Us as an institution in the UK, although we can't day trade, we certainly understand how to. And this stop hunting is a complete misconception. We do not hunt, we liquidate you out the move because you are our energy that we need to fill as much of our orders as possible. And this is where you, as day traders, do not want to trade positions. You want to be away from the sharks and you want to swim with the whales outside these areas. In many of these videos, I will teach you how to find these areas. However, today's content is first to identify where the actual smart money is flowing, i.e., where us as an institution is looking to place our millions into stocks or sectors. So today we're going to discuss broader markets, the S&P, QQQ, IWM small caps, and then we're going to move on to sectors. Okay, moving on to firstly, obviously the beast of the market, shall we say, the S&P. Now, I think it was a few months back, I released the video content to explain exactly where the S&P was going, and I was correct in what I said. As you can see, I've not adjusted the chart on S&P for 3 months. So 2 months it was now. And I've left the drawings on the markets chart. As you can clearly see at the moment, we did draw the price range where we done our research of where we thought the S&P was heading back in January. Was it January? Yeah, January. Back in January. And we was correct. It came all the way down to this area and has sort of had a rebound, a reversal maybe. Without the indicators, we can't really give you more information right now. But what we'll say is at this moment in time, the S&P is trading at 655. Okay. This month, it's made a small retracement, bullish retracement. So what we're going to do is we're going to delete, we'll get rid of these now. I'm going to show you how to update the broader market charts, especially the S&P. And this is where you as traders should start all the time. You should not be sitting in front of a desk like a plank waiting for news to come out on a stock. You should already have a list of stocks for that week ready to trade. You're just waiting for that final confirmation move, which again, I will teach you what to look for. Right, so let's quickly update the S&P. Let's bring back in the volume weighted average price for a moment. So what volume weighted average price is currently at 653, and the S&P is trading at 655. And what does that say to us? Well, if you zoom in on a monthly, that says to us, okay, that it recently came from a bearish momentum and has now changed to bullish momentum. Okay, not with volume as of yet, and we need to look a bit further into the candle itself by going into the weekly. So we're going to change from monthly to weekly. Okay, so now we can see a lot more clearer that we've been in a decline for some time, for a number of weeks, at least 8 weeks. However, we've seen a nice move last week, and this is a really bullish move. So we've seen the S&P now turn a corner, and it looks like this was the area of interest before smart money decided to move back in. Okay, so we're now trading above the volume weighted average price. We've also got a volume on we've also got volume on the weeklies. Bring back the indicators. We're now testing the 20-day moving average with volume and the volume weighted average price. So what we're saying is we've now got a squeeze, okay, between the 20-day moving average price, which is basically magnetizing towards this previous monthly area of interest. Okay, so this is a monthly point of control. It looks like it's a weekly, it's not. If you go back to the monthlies, this is where the last time the S&P hit on a monthly and reversed away. Same again here, hit, reversed away. Okay, so we're on the weeklies right now. We now know volume weighted average price, okay, is support and price. We know that the volume weighted average price and price itself is squeezing the 20-day. Okay, what we need next is we need the actual volume at price. So we need to know exactly where we as institutions are placing our money if we were trading the broader markets. So we're just simply going to add in a volume weighted a volume profile from the last time it came into this zone. Okay, so now we've got a developing area of interest around 663. Okay, so what we're going to do is we're going to place that. Now that, first things first, this is not a level 2. This is not a buy zone, okay, until it's broken above and confirmed that it's moving away. This at the moment is a resistance zone. The actual developing point of control at this moment in time is roughly around here. So anywhere between 648 and 647. So what we're saying, if we were looking at the S&P, we would be looking to enter in a position and start building money in this market once price has came into this area and closed above. We wouldn't put all our money in at once. We'd slowly build a strategic position in the S&P. So you're looking anywhere between 647, 649 maybe, around this area. That's it. That's it. That chart is done. Go over to IWM, and as you clearly see, the IWM has actually already been done for us, okay, which is good. So let's talk through it. Small caps at this moment in time, developing point of control is 248, 246 to 250. So it's quite a larger area, okay. But you clearly see at this moment in time, we're trading above the volume weighted average price. We're trading above and close the 20-day moving average, right? In this trading zone, okay, we've actually got a point of control forming here as well. Okay, so this is where a lot of the trading has took place. Okay, and this is where, if you see it, we had a little bounce and a reversal, another little bounce and a reversal, another bounce, up we come, and now we've closed into this point of control, okay, which is clearly shown that it's beginning to develop a new point of control on the wider volume profile. So this is where at this moment in time smart money has moved into and is starting to accumulate position on small caps and is moving away. And this here is the point of control where you will probably meet the most resistance. Now, one thing we can do is, one thing we've not done on this chart, is anchor a volume weighted average price at this highest point. Okay, what this tells us is next week we expect the price to either retrace back to here and continue building, okay, continue consolidating, or move away from this area, okay, and reverse at this point, because this is where the most volume on the highest high point has sold off, as the 50 days moving. So these two will meet together, and this is exactly at the point at which the small caps will see a reversal. Okay, so what we're saying is at this moment in time, small caps is of great interest. So if you were screening for stocks, you would look for small caps. QQQ, tech, I think we've already put our, yes, we have. We've already updated the chart already. Okay, so QQQ. Again, we're on the weeklies. Clearly see volume has picked up. Volume weighted average price is support and price. Price is squeezing 20-day. We've already got an anchored point at the highest resistance point. Okay, if you wanted to, you could go further back and anchor it to here too. And we can clearly see we've got two areas of interest at this moment in time. The furthest point away and the most recent higher high reversal. But not only that, what do you notice about these anchored points? We notice that they fit perfectly, exactly with the 50-day moving average at the current point of control. And this is at the exact point that you would be looking to sell off your order and then potentially continue to build a new position as price came back down. We seem to have a developing point of control line already placed in this area, which to me does not look like is the right place to put that point of control. So with the monthlies, okay, so what you can see at the moment on QQQ, this is not a developing point of control, okay? And the reason it's not is because we do not have a higher peaked volume on the volume profile between this price range, okay? So we do not have a developing point of control at this moment in time. So you should not be looking at QQQ at this moment in time because you don't know exactly where money or the smart money is moving into. Go back to the weeklies. Let's see if we can actually try to identify a developing point of control further back. So if you look at, let's look at October to the beginning of the year. Okay, and then we'll look at the beginning of the year all the way to this point, and we'll get rid of that for a moment because that's okay. So we can clearly see at this moment in time there is a point of control, which is exactly where we've got our marker, 600 to 604. Developing point of control, it looks like around 586 to 583. Okay, so quite tight. It looks like this at this moment in time is exactly where the developing point of control is beginning to form, and this is where consolidation will begin to appear. Okay, it might be this. So what we're saying is you must be patient over the course of this month, I'd say, this month, before we can actually identify where smart money is actually accumulating position on the QQQ. Okay. Move on to sectors, and what we'll do is we'll quickly identify last week which sectors made the most gain. Real estate. So if you look at real estate, we've got a perfect setup at the moment. We've got the developing point of control, which is clearly identified. Okay, $40. We've got the point of control at this moment in time, $43. So what we're expecting to happen, price on real estate stocks to come through this, slice through this like butter over the next 3 or 4 weeks and test the 43. Okay. And what we'll do is we'll anchor a volume weighted average price at this point. So this is the next point of resistance, which meets the 50-day moving average at the moment. So we expect next week for a retracement back down to this level, maybe, ideally this level on real estates. Build position on real estate stocks, okay, and move away. And this is the next area of resistance, which we will likely get a bounce, come back down again. And if it comes back down and accumulates again in the third week of April, 4th week of April, we will then slice through this price zone and test the 43. So we've got a number of stocks in the real estate at this moment in time that potentially can move quite fast. We've got quite a big area, haven't we, to work with on this as well. So let's see if you can use a fixed price range to identify exactly where money's moving to. So we'll go from the end of this month through 3 months. There we go. And then we'll go from start of January, December, November, October. And then we'll go from beginning of October straight say through, we'll go August. So if you look at the fixed points, developing point of control, developing point of control, developing point of control, point of control, okay? Can't break through because you've got high volume selling off. Can't break through because you've got high volume selling off. Area of interest, support, price moving away, coming back down, filling orders, moving away, squeezing, yeah, big squeeze in this area here, breaks away, tests, come all the way back down, and we've got another squeeze happening at this moment in time between the volume weighted average price, 20-day moving average, 50-day, anchored volume weighted average price. So at this moment in time, real estate, okay, is exactly where I would be looking for value stocks.